T1, T2, T whatever did not start today. It started at the inauguration of the Capital Market Master Plan. That time we decided in that document that we're going to get here.
Capital markets that pivot the development of the economies are known for seamless, efficient, and innovative systems that enable shorter settlement cycles post-trade. Nigeria recently asserted its position as a leader in capital market innovation in Africa and an emerging globally competitive financial hub with the official migration of its post-trade settlement cycle from T+2 to T+1, which means post-trade settlement in the market has moved from 48 hours to 24 hours. To mark the formal migration of the Nigerian capital market from the T+2 to T+1 settlement cycle, regulators, leaders of market exchanges, market operators, and key stakeholders converged at the Nigeria Exchange Limited to witness a significant transformation in the country's market evolution. Remarks from the CEO of CSCS PLC, Chairman of the Board of CSCS PLC, and Group Chief Executive Officer of the Nigeria Exchange Group and Chairman of Board of Nigeria Exchange Group provided insight into the progress that has been made from manual market process to tech-enabled settlement.
This milestone brought Nigeria into closer alignment with leading global markets across Europe, Asia, and the Americas. It demonstrated our readiness to operate at the speed of modern financial markets where efficiency, transparency, and rapid trade finality are increasingly essential. As the nation's premier central securities depository and a significantly important financial market infrastructure, CSCS remains committed to driving the next phase of market evolution. We will continue to invest in innovation, strengthen market infrastructure, deepen collaboration with stakeholders, enhance operational resilience, and support initiatives that improve efficiency, transparency, and investor experience. The journey from paper certificates to multi-month settlement circle to T+1 settlement has been remarkable. It reflects decades of vision, perseverance, collaboration, and innovation. But the future holds even greater possibilities. Together, we have built a stronger market. Together, we have strengthened investor confidence. Together, we have positioned Nigeria's capital market for greater competitiveness and sustained growth. And together, we will continue building the future of the Nigerian capital market.
This is really not a destination at all. This is part of a longer journey, what we're trying to do. Where we're looking at a market that we expect liquidity to be deeper. And of course, I should say, we were in the heart of Jude and Femi, and as a team at the NGX side of things, also with CSS, it's just one big family now and trying to drive a lot of this. There's a lot of work going on now around liquidity. The DG also is spearheading. We've had several meetings, not just market liquidity, market depth. And you start to see a lot more on that. To underpin all of this, of course, is technology, which at the CSCS board, we're spending a lot of time on this. How do you have a market that is ready to drive and handle a lot of this traffic that we're seeing now in the markets? There's a big mega listing that is ahead of all of us now over the next few months. How do we make sure that as a market, our technology systems are ready, our data centers are ready, our processing, our trading, etc. And then away from that, how do we start to position the entire ecosystem away from just our regular shares and the regular equities that you would know us for? How do we get into private markets, into fixed income? How do we get into digital assets? There's just so much that is out there. And I thought I would leave us all with that just level of encouragement. I think this is really just the start of what we hope by God's grace is much deeper markets, much more diversified markets. And we look forward to counting on all your support for that. Thank you all very much for being here.
What this means for few that may not be versed with the market jargon that the MDCSS have mentioned is that all transactions in our market will now settle on the day after trading. If you buy today, your account will be debited tomorrow. If you sell today, you will get payment tomorrow. Where the change means for seasoned investors and market practitioners is further turnaround, increased liquidity, and more efficiency in our market. The move reinforces the Nigerian market as one of the most efficient markets globally.
The Director General of the Securities and Exchange Commission, Dr. Imomo Timi Agama, described the T+1 settlement transition as a signal to the global capital market ecosystem that Nigeria must be globally competitive in trade settlement.
T1, T2, T whatever did not start today. It started at the inauguration of the Capital Market Master Plan. That time we decided in that document that we're going to get here. So it wasn't something that we just woke up, to bring to bear. No, the market thought about it. It wasn't even the SEC, it's the market that decided this is where we are going to. But what's important is that you start a journey and you get there deliberately and intentionally to change the market. In the process of doing that, not everybody will be happy, certainly. But one thing that is important is that no matter what your complaint is, we are ready to make sure that we make you happy. It's our responsibility. We are ready to address the concerns that will ever happen here. So, the T+1 settlement cycle is now live, and with it, a new era has begun. To fully appreciate the significance of today, we must first situate it within the journey that brought us here. Not long ago, and this is important context for all participants in this room, Nigeria's capital market operated a T+3 settlement cycle, 3 business days between trade execution and final settlement. And we are transited from that point even to where we are today.
Market leaders speak on the T+1 migration and the implications for the Nigerian capital market and economy.
Well, I would say a very big congratulations to the capital market because what we've done now, we've moved to the next level from T+3 to T+1, which is in compliance with global best practice. And for the commodities ecosystem, is a very serious welcome development. Because normally in the global space, for example, for you to trade gold, it's supposed to be T+0 or T+1. And now we're moving towards T+1, and we're at T+1 today. Now it means that finally now, there will be more investor confidence in our ecosystem. Value can be gotten almost immediately, and any inherent risk in transactions is reduced to just one day now. And also for value, for people that always want to plow back investment into the ecosystem now, T+1 makes it quicker in the ecosystem. And also the little issue that goes around the risks of trading, that is the marginal revenue that can come in during T+3 trading, that the space in it is now being covered now. And the good thing again is that the DG just announced today now that we're now going to 2.0 now, capital market 2.0, which will now take us to the next level.
Well, I mean, we're coming from a long distance, so it means that you can turn over your capital very rapidly. That's good for the instant wealth creators that we see in the new investor community today. So we've achieved that. What we now need to do is to put content behind this, so that it actually becomes meaningful for wealth creation. But the structure is there. We have demonstrated that we're ready to compete globally, and so I think that it's just going to expand the market as we're beginning to see.
We know where we are coming from. For action, we know that on this same floor, we had it that settlement period sometimes back used to be 15 days, meaning that investors who invested in the market or who sold their shares did not get their fund until 15-day time. We graduated to 3+3, 2+2, now T+1. It will make the market very robust. It will make it very transparent. It's a liquidity driver into the market. And what is even more, foreign investors will be very willing to come to the market because they see that there won't be any hindrance in collecting their settlement. Making getting their proceeds for sales sold today. When you sell today and you get your money tomorrow, yeah, I think it's a plus for the market.
We should be able to get every stakeholder on board. That's one of the learning points. A few stakeholders may have been missed in the beginning, but we're able to get everyone on board. But one key learning point is that from day one, everybody should be on board very quickly. Another thing that we learned is that this also brought out certain inefficiencies in the market, which we had to correct. So that is also important as you move on to a project of this scale, that you're able to access in terms of the inefficiencies in the market and correct them very quickly. Those are key learning points for us.
How did the committee take all this into consideration to ensure that this rapidity in technology, which is good, doesn't bring huge costs, but eases investors to come to the market?
There's literally zero cost in terms of this transition to the market for T+1, literally zero cost, because these are inefficiencies that existed in the market. So the idea, the notion, the innovation to move on to T+1 was more of a corrective thing in terms of being able to actually just utilize and optimize what we have correctly. And so in terms of cost, there's absolutely no cost to the market as we move on to T+1. Absolutely no cost.
What this means is that the Nigerian market is evolving. Now, when you look at the global market and the global best practices, those top markets are actually on T+1. So what that means is that this is a big achievement for the Nigerian market to get to the level where we can now compete with the best markets in the world. So this is an achievement for the Nigerian market as a whole.
The migration from the T+1 to T+2 settlement cycle reinforces the Nigerian capital market as one of the most efficient in the world. This will increase access to liquidity for investors and democratize investment in the country.